Hello guys, this is my trading journal for Friday the 30th of April, the final trading day in April. And as you can see from the heat map, it was a risk-off day in the equity markets today. All of the major indices closed in the red, and you can see a sea of red apart from Tesla, which had sold off a lot earlier in the week and mounted a comeback today. But even Amazon and Apple, that both reported stellar Q1 numbers, their numbers beat the street's estimates. They topped it by some. They were not spared in today's sell-off as profit takers came in and took some profit. So Apple down 1.5%, Amazon down about 0.11%. Google had some good numbers. Facebook had fantastic numbers. They were all taken down. There was a bunch of strong economic data that came out this week, and that brought back the attention to the 10-year US Treasury. So we had strong earnings from large cap companies. Consumer spending in March jumped about 4.2%, which was way better than was expected. And personal incomes in the US surged by a massive 21%. Boosted by the fiscal stimulus from the Fed, of course, and the 10-year US Treasury, which had been below 1.6% yield for over a week, came up above 1.6, and by close of business today, I think it was about 1.62. Moving on to the VIX. And even though the Fed chairman made a statement this week and he reiterated his belief that the rise in inflation is transitory, and he does not believe that even if inflation goes above 2%, it will not remain high persistently. Even when the Fed came out and reiterated that some quarters of the street are basically calling BS on his dovish stance, especially with income rising by 21%. That can't believe that inflation is going to go up and it's going to stay up. They don't believe it's going to go down. So as a result of that, there was some downside protection buying when the rates started marching upwards again. There was some downside protection buying, and the VIX rose by 6% to close at 1861. So the VIX rose to 18.61 today, up about 6% on the day. On Wednesday it was around 17.6. So there was a lot of downside protection buying today, as well as some profit taking. There are now 20 days for the regular May contract to expire, and there are now 48 days for the June contracts to expire. And from the mid of next week, I'm going to start looking for credit spreads to sell in the June contract. In terms of trade ideas, I had no new trade ideas today. And moving on to my open positions, I still have 4 open positions and 1 synthetic position in GNOG. All of the open positions are either debit spreads or straight calls. And all my open positions are directional plays. So the underlier or the stock needs to move in my direction in order for the position to make money. Directional plays tend to have a lower probability of success than credit spreads. And with directional plays, the position makes money only if the stock moves in the intended direction of my position and if it hits a target. And as such, the initial cash outlay is much smaller on a debit spread or straight call than a credit, and the potential for profit is much greater as well on a debit than a credit. And I do not need all my debit spreads to be in the money to finish in the green for the month, given that they're lower probability trades, and these debits require no position management like credit spreads do. I'm simply willing to lose the entire debit I paid to get into my debit positions, or for buying a straight call. And that's why position sizing is quite important, as I mentioned when I open the debit spread. So moving on to open positions, the first one is GNOG. This is a synthetic position I didn't get filled in. On GNOG, bought a straight 20 call for a debit of 37 cents. Let's see what GNOG did this week. So this is a 2-year chart of GNOG. GNOG has tested the bottom of the range 3 times and bounced off it. So tested it once here, tested it once here, tested it a 3rd time, and then it's kind of bounced off. It was down today in sympathy with the rest of the market. So this is today's candle. But unlike the rest of the market, it is not trading near its highs. So when you look at the likes of, let's say, Amazon and a few other tech names, they're trading in this section of the 2-year range. GNOG is more towards the bottom end of the range. My target remains a retest of the swing high around 17.16. So around here is the intended target on this thing. And with 20 days to go until the May contract expires, there's ample time for it to hit the target. I have no position in GNOG, but I'm keeping an eye on it, and when it does hit the 17 or around the 17 level, I'll post an update alert on the position. So that's the outlook for GNOG. It's been consolidating nicely, moving up slowly. Market sold off today. Oops, it didn't take out. Market sold off today, and it still didn't take out this low here. Target is around here. So that's the GNOG position. The second position is in BLUE, or blue. In BLUE, a long 45 call. Paid a debit of 40 cents to get into it. Let's see what BLUE did this week. So BLUE closed at $30, down about 23 cents on the day. Implied volatility 36.9. BLUE is also trading at the bottom end of its 2-year price range. So this would be the bottom end of the range. And the consolidation around the bottom end of the range continued this week. And as I mentioned last week, the expected catalyst that could send this stock higher is earnings. Earnings from BLUE are due on the 10th of May. Now, is it a certainty that earnings are going to be good and push the stock higher? I don't know. I don't know. But what I do know is that the stock is sitting at the bottom end of its 2-year range around here. This being the high, and the middle will be around here. So it's at the bottom end of its 2-year range. And there appears to be some sort of passive accumulation going on. People are passively buying the stock ahead of earnings. If I zoom into the recent price action, you can see it's been slowly but gradually moving up. Nothing massive. They're not pushing the volume higher, no volume spike. So it's been passively bought. There are no spikes in volume. People are not rushing in to buy it. And with a small cash outlay on the straight call, what I'm doing is I'm willing to bet that the path of the least resistance is to the upside. If the numbers turn out to be even not so bad, given where this thing is on the 2-year range, the numbers, even if the numbers are not so bad, I would expect it to move up a little bit. And if the numbers turn out to be good, we may well see a spike to the upside. So that's my view on this. Now on the flip side, if the stock does not move up after earnings, then I lose a premium I pay to get into the position and move on. So that's my view on this one. That's why that's the rationale for putting on the trade. I think I mentioned it previously, but just to reiterate that. So that's my thinking for getting into this position. It's down at the bottom. Earnings are coming out on the 10th of May. If the earnings are good, we may well see a spike. If the earnings are not so good, it might just come up there. But time will tell. The next position is in IQ. In IQ, I bought the 17.5, 22.5 call spread as a debit, and I paid 46 cents to get into it. Let me see what IQ did this week. So IQ's story is similar to Blue. It closed at 14.71 today, down about 37 cents on the day. Implied volatility 54.9. IQ is trading at the rock bottom end of the 2-year price range. So we say this is the prior bottom end of the range. It's trading around here, so around the bottom end of the 2-year range. Last week the buyers stepped in on this candle here, this green one here. That was last week. The buyers came in last week and they aggressively bought and pushed it higher on above average volume on this green candle here. This week, however, the stock slid back a bit, been sliding down, but on relatively average volume. There's no volume spike, and it may well come back to retest this low around 14 before it moves back up again. The upside catalyst I'm waiting for on this one is also earnings. Earnings are due on the 18th of May, and my target on this one is around $18. So somewhere around here is my target on this one after earnings. So that's my rationale for putting on this one. The next position is in MXIM. On MXIM, I bought the 85.80 put spread for a debit of 63 cents. So MXIM closed at $94, down about $3 on the day. Implied volatility 12.5. MXIM, unlike the prior 3 positions I looked at, is trading at the top end of its 2-year range. So call this, get rid of this. This would be the top end of the 2-year range, and it has made 4 attempts to break out of this range to the upside, and so far all the attempts have failed. So we tried once here, tried here, tried here, and tried here. Well, maybe these two could be considered as one. It's tried at least 3 times to break out of this range here, and so far it has failed to do so. Earnings were out this week. I think earnings came out on Wednesday, and the numbers were great. So they beat the street expectations on both the top and bottom line. But given that the stock has had such a massive run up since March of last year, even the good earnings was not enough to break it out of this range. And there was a reaction. There was a reaction after the earnings. The stock got a bit of a lift. This green candle here, and out. This, so excuse me. This green candle here. This crosshair is getting in my way. This green candle here, that was a reaction after earnings, and you can see the corresponding volume to it is quite high. This is the volume on that candle. But given that it's trading near the highs, earnings came out, it was able to break out of the range. It would not be unreasonable to expect the stock to back off a little bit and test the prior swing low around here. So I'll call it, what's this, 84, low of around 84, 82. So this is my downside targets on this one. Earnings have come out. The buyers were not able to break out. Maybe the sellers can now take the initiative and push it down towards my target here, which is the prior swing low. So that's my thinking on this one. The final position is in TAN. And on TAN, I bought the 9500 call spread debit of 46 cents. So TAN closed at $83.15, down about $3 on the day. It was whacked. IV about 14.3. So TAN or TAN has had a very decent run up since March of last year. It's just been on a tear. And then from the top, and the buyers had 3 attempts to take it higher and break out of this range here. Had 1 attempt there, 1 there, 1 there. They were unable to break out to the upside. The sellers took the initiative and smacked it down, came down here, found support. The buyers tried 1, 2, 3, and now there is a tug of war going on between the buyers and sellers for who can take the initiative and force it out. The stock gapped up last week on very high volume. If I clear this and zoom into it, look at this candle here. That was last week, and that's this candle here. So the buyers came in and pushed it higher on above average volume, and it created a gap. A gap opened up at 85.60. Now, with a gap opening up, with this gap here, where no price traded, it made it easier for the sellers to have a target. I mean, the markets love to fill gaps. There's another gap that's opened up here to the upside. But with this gap opening up around 85.60, it made it easier for the sellers to target this and sell into it and fill the gap. And the gap has been filled here. Yesterday, the market filled the gap. So this gap that opened up has now been filled. There's a gap to the upside, which is good for my long position. But on this one, I bought the spread of 46 cents, and let me just double check. Yeah, bought it at 46 cents. And last week, the premium doubled to greater than $1. So I paid 46 cents to get into it. It was trading as high as, I think it went as high as 155. I took half of my position off at $1, which was more than 100% of what I paid to get into it. And there was an opportunity to close the entire position with a greater than 100% profit. But that option did not appeal to me. I know some people took it, which is fantastic. But in my case, I've already taken half of my money off the table. So whatever I've got left in this trade is the house's money. I can no longer lose anything on this position. So I'm willing to wait and see if the buyers can take the initiative. Now they fill the gap to that opened up when the market gapped up on significantly higher volume than what's happened since. I'm willing to risk the remaining of my position, waiting for a retest of this level here around, I think it's around $99. Like I said, I can no longer lose anything in this trade. I've taken half of my position off at a price that was double what I paid to get into it. So basically, the house's money, and I'm willing to take that risk. And that is the beauty of trading. We all have different risk appetites. I know some took their entire position off and banked 100% return on this trade, and that is fantastic. But I am willing to risk waiting for a retest of this level I've marked here. And at worst, if the market doesn't come and retest this, then I have a break even on the trade. But you know, that is just how I trade these directionals. I'm not just going to take 100% around here when there's a bigger targets here. But what I would do is, instead of losing money, given that it's gone up a bit, I'll take half the position off and wait and see if the buyers can actually step up. They fill the gap now, step up and come back, and even if they want to retest this, you know, step up and come back and come here. Now, TAN hasn't got any earnings. There is no major catalyst, but the sector has been on fire since Biden announced his green credentials, and he made reducing greenhouse emissions as his top priority. And this is a green solar ETF. The solar sector has been on a tear. So, you know, it's not unreasonable to expect it to come back and retest this swing high. So that is my thinking on that one, and I think that was the last open position ahead. And that brings me to the end of my journal for today and for the week. And a quick summary and takeaways: none of my positions have hit their targets this week. I'll keep an eye on all of them, and as soon as one of them does hit the target, I'll send out an alert and the action to take. Also, mid next week, I'll start looking for credit spreads to sell in the June expiry, so keep an eye out for an alert. And that brings me to the end of my journal. Have a fantastic weekend, everyone, and for those living in the UK, have a fantastic long weekend and have a happy Bank Holiday Monday. Thank you. Bye-bye.